What's going on, everyone? Welcome to another video. Hope everyone's having an outstanding day, outstanding week. I wanted to make this video breaking down a trade that I took on my $200,000 verification account. Coming here on my FTMO. This was actually the trade that made me pass my 200K verification account. You come right here. Here's me. Reload. Let's come on to the verification here, right? So you can see here I need 3 more trading days for this account. You can see right here on the 3rd of June I had a substantial win on this trade right here. Had a couple wins and losses before that, but I was able to catch a really good risk reward setup on this account, right? I'll explain that here. All right, so all in all, price came to this level of support, broke below with a bearish engulfing candle, right? So at the time I had saw this candlestick. I don't remember what I wanted to do afterwards, but once I came back onto the chart, price was actually up here. So I took a trade here with my stop loss. It was like slightly above here. It's like around right here. And my take profit was slightly above this level of resistance right here. It was literally like a 1 to 3 setup, a 1 to 3 risk reward. So I entered the trade up here and I got exited out right here on this setup. All in all, I like to trade bearish and bullish engulfing candles. It's what I understand best, and it's what I like the most, sincerely. It's what I understand. It's what I'm able to spot the easiest. My advice to everyone is simply just find out what pattern it is that you like to trade, candlestick wise, ideally candlestick wise, and stick to that. If you could come onto the market every single day and trade that same pattern, statistically speaking, you're going to have a consistent result in the long term of things. So regardless of if you make money for the day or for the week, even at times for the month, for like a couple of months, it'll become irrelevant. Because statistically speaking, the odds are constantly going to be in your favor. People don't understand that candlesticks in the market at the end of the day is simply just a behavioral pattern. You come onto any of these candlesticks, they tell a story, right? So this bearish engulfing candle, a bearish engulfing candle pattern tells you a story. What does this tell you? It tells you that at this moment in time, there are more sellers than there are buyers, right? So statistically speaking, it is more probable for price to continue lower than it is to continue higher, because there are more sellers and there are buyers in the market, right? That's what a bearish engulfing tells you. A bullish engulfing tells you the opposite, right? Each candlestick tells you a different story. A doji will tell you a story. I don't know, different candlestick patterns will tell you different stories, right? But by consistently taking advantage of that behavioral pattern in the market, in the long term, you will make a consistent profit. Why? Because there is a higher probability of one thing happening over another, right? When I see behavioral pattern, I mean that the market is literally made up of people, right? They're made up of individuals just like us. It's made up of banks, of institutions, retail traders, all of these things. So in different moments and times in the market, these behavioral patterns, in other words, factors that have caused people to react in a certain way, either to buy or to sell the market, has resulted in the formation of a certain candlestick pattern within the market. In this case, say for me, a bearish engulfing candle, something happened within the market that caused this behavioral reaction, right? So by me consistently taking advantage of this behavioral reaction in the market, there is a consistent statistical probability that is in my favor. So maybe within the next 10 trades, it might be finished negative, but within the next 20 trades, the probability of it finishing a profit increases. Thus, in the long term, in the grand scheme of things, I continue to have a higher probability of maintaining in profit and sustaining my profit. Why? Because I am consistently taking advantage of that probability. But here's what happens. A lot of people want to try out other strategies, they want to try out other candles, and then that's where they end up making mistakes, right? You'll notice that like when people try to do that, what's usually going to happen is that they're going to enter into a different area of probabilities. Say right here, this is the probabilities of a bullish and bearish engulfing candle. You can explain it as within this circle, right? This is the engulfing candles. And then here we have the doji's probabilities, right? So here we could be right now in a winning streak, right? or sorry, we could be in a losing streak. And then soon we're about to be in a winning streak. So we're having our lower lows, lower highs. And then we decide to change up the strategy because we think that this strategy no longer works, right? So now you come onto here, and what you fail to realize is that this candlestick pattern is actually starting its period of drawdown, right? So now you're actually doing bad on here, and then this starts going bad for the same amount of time as your bearish engulfing or bullish engulfing or simultaneous. So now you said this doesn't work, and then what happens? You hop to another one, and then to another one, and then it never ends. So then you're consistently not taking advantage of any statistical probability. So if you're not taking advantage of any statistical probability in the long run, then there is no way for you to actually be consistently profitable. You're screwing yourself over. However, little do you know that if you had stayed in this for long enough, eventually you would have started being in profit. Might have been slowly, but you would have been in profit. And then eventually, once you're at this break-even point, maybe it comes down a little bit, but then you're eventually in profit again. And then once you are in profit, you take profit. You withdraw from your account. Then you're back to break-even, let's say. And then it continues to be in profit. And every time you have profit, you withdraw. People will tell me, oh, you might not make a lot of money, or you take your money out so fast, that could cause for you to be in drawdown periods for a longer time. And I tell them, well, you know what? I'd rather be in a drawdown period for a longer time and actually have my money secured in my pocket than to have never secured my money at all. Because then that's where your emotions come into play. If you take your money when the market makes it available to you, that means you're literally securing your investment. To me, that sounds like a smart financial decision. That's like, in my opinion, what I believe a financially literate person should do. You're putting yourself in a positive position because you've already withdrawn your money. All right, if my account's in drawdown, that's fine, because as long as I continue to trade my statistical probability, I will eventually come to break even, profit again, and then withdraw. So all in all, in the grand scheme of things, you continue to be profitable, you continue to make your money, right? I normally go for a 1-to-1 setup. If I see something else, then I'll take my opportunity on that, right? Coming on to my metrics, you can see I passed this. We need 3 days for this. I actually have a 100K account that they reached out to me today. I officially passed my 100K verification. You feel me? We out there. I'm currently waiting for them to merge this account to this 100K account that I have right here, and I'm actually getting my profit split. I believe it should be tomorrow. Today's the 6th, right? Yeah, today's the 6th. So I should be getting the profit split tomorrow. It's gonna be 1,600. Let me see. I'm not sure. I'm just taking my money though. Coming here to the payout ratio, 1,633. Not crazy money, but honestly, I'm happy with it. And once the market made it available to me, I stopped trading for a 2-week period. Me personally, I stopped trading at a 2% profit for a 2-week period. That's as soon as FTMO could pay out. So that's where I stopped. Based off my statistics, a 1% is too low. A 3% and above becomes a little less likely. 2% is more or less a sweet spot for me. So once I see that profit, I'm happy, I take it. And I make my money. A lot of people won't stop there though. So you get this message right here. They have to check everything is okay, check what trades you took, all of that, and then they get back to you so you can actually get the withdrawal. But yeah, guys, that's pretty much it for this video. Just remember, please make a trading strategy, make a trading plan, stick to it consistently. That is the only way that you can make money in the long term. I literally have a note right here on my second monitor. It says, you cannot afford to break your plan. You don't know what will happen in the future. So why would you break your trading plan? We can't predict the future. So if the only way we can make money is by consistently trading a plan, then that means that none of us, no trader, is wealthy enough to break their plan. You can't afford to, because if you continuously break your plan, your business will never thrive. Your business in regards to trading will never take off. You can't have profit if you don't consistently do the same thing. Guys, please make sure that you keep that in mind, write it down. If you have to write it down in a little notepad, put it on your monitor, on, I don't even know, wherever it is that you can see it as often, your lock screen, bam, take a picture, put that as your wallpaper, do whatever you gotta do, make sure you remember that, don't forget that. If there's anything that you guys wanna see in the next video, please feel free to let me know. And thank you guys so much for watching. I hope you have an outstanding day and an outstanding weekend. Stay safe, guys.